Welcome back, everyone. This is going to be a special report I'm doing talking about WeWork, but WeWork more in the context of using it as an example of how you shouldn't fall for any news release and news press information, even if your preferred news outlet publishes it. I covered this just a couple months ago over the whole Rosatom debacle about how they were not shipping out any more uranium exports and how that was quote unquote fake news, even though that was grounded in more reality, I suspect, than this. So, no, we're not going to talk about WeWork and their bankruptcy, and we're not going to talk about SoftBank's projections of WeWork. I think this is from a slide deck from 2019, which hopefully you can stick with me here for a moment before we get into a 150% pump and dump after hours news event that we're primarily here for. But let this also be a lesson in fine print. So you see this beautiful chart, telling you everything you could possibly need to know. And in the fine print, it says, the information presented herein is provided for purely hypothetical illustrative purposes only. Information herein reflect current beliefs of SBG as of the date hereof and is based on a variety of assumptions and estimates that are subject to various risks. I sure would like to see their modeling that caused them to think that as they were projecting or providing this illustration that this is what happened, because I assure you it's not, and it's not just pandemic related. It goes on to say, the metrics regarding select aspects of the company's operations were selected by SBG on a subjective basis. Such metrics are provided solely for illustrative purposes to demonstrate elements of the company's business, are incomplete, and are not necessarily indicative of the company's performance or overall operations. So it's a fictitious representation that's not really grounded in reality, but is predicated on hopes and dreams. I think is another way of wording that. They go on to say, there can be no assurance that historical trends will continue throughout the life of the SVF1. Actual results may differ materially from projections, estimates, and other subjective and or forward-looking statements herein. For the avoidance of doubt, this hypothetical illustration does not represent WeWork's actual EBITDA or other metrics. All right, so there you go, Geez. So what I want to talk about is this 150% plus move based upon a news release. And it's phenomenal. So what happens, you might ask? Well, I'm not going to read all of this, but we'll read this. Coal Capital Funds, this is a press release, a news release that occurred November 3rd, Friday. Coal Capital Funds sent the following letter to the board of directors of WeWork. We believe that it is in the best interest of WeWork to support our acquisition of 51% of all the outstanding shares owned by minority shareholders at a price of $9 per share. Mind you, this was released while WeWork was trading at 83 cents a share, and provides Coal with proper representation on the company board. We have received feedback from City National Bank and JP Morgan regarding the financing for this acquisition and expect to select a lender and have a financing commitment prior to execution of a definitive agreement. We have consulted with God, legal, financial, and other advisories to assist us with this transaction. We stand ready to proceed timely. So what are some red flags? Well, an after-hours Friday announcement is a pretty good red flag. And the only thing that would top that is a Friday after-hours announcement before an extended holiday weekend. Then you might go deeper and say, who is Coal Capital? And notice, they're buying it $9 a share. We're getting this to a moment. So let's address this red flag. In addition, in order to deliver maximum stockholder value, we believe that our proposed price of $9 per share, representing a $7.89 share premium over WeWork's last closing price of $1.11 per share, November 2nd. So that's a 700% premium. So first red flag, Friday after hour announcement. Just as much of a red flag is a 700% premium. I can't think of a time that I've seen that sort of a premium. And the funny thing is, and this is a red flag that you, a market participant, might have, which is, oh, but my respected news agency published it. Well, the probability that you actually have a respectable news media outlet is minimal. The whole idea behind trust but verify, caveat emptor, due diligence, like that doesn't really exist. Time and time again, what it really is to try to publish a story before anyone else publishes a story, so that way you get the most attention and the clicks and reviews. And they're guarded by knowing that everyone else's, many others are going to do that as well. So then there's this institutional imperative. Just like if your retirement fund or some hedge fund you decide to invest with underperforms the market, they'll just be like, yeah, well, everyone else is also underperforming the market, so it's not as bad. It's a relativistic comparison instead of an absolute comparison. It's subjective instead of objective. And then they'll just be like, yeah, we redacted it, but a lot of other people published it poorly. Well, that's because you're all playing the same game. Of hurry out there, don't try to call anyone, don't try to confirm anyone. Did they consult a board of directors? Did they call and consult Coal Capital? Highly unlikely. Highly unlikely. Because many of them wouldn't have then redacted it. But they don't have time to find out if it's true or not. No, they just need to get it published. So if you want to, you can read the rest of it. A lot of it actually reads pretty nicely. So either you can, hopefully when you're done watching this video, you can pause the frames and read this or Google it. It all reads, like I said, the rest of it's good. I really like We've Consulted with God. That's a classic. So thankfully, I suspect this was more of an algo-driven thing, not so much retail traders buying the pump after hours on Friday, which does make me feel a little bit better. And you can't always do a bunch of due diligence. I mean, today, as publishing this, I'm recording this the same day I'm publishing it. So I believe November 9th, Thursday, 2023. Like NextGen came out with a news release about how the Canadian government's okayed an environmental study or something like that, and stock's up 6-7%, and you can kind of confirm, make sure that's true. The SEC filings, you can go to the website, have they published anything, and then news outlets, of course, are they publishing anything, and you can kind of cross compare and use your own discretion. And I can't say I expect everybody to do a bunch of due diligence, but when something crazy comes out, like, at least read the basic news release, the offer, and sometimes they're 50 pages. Well, you don't have time to read 50 pages, fair enough. But that whole God statement was in the first page. So don't tell me you don't have time to read a page or the summary. And so if you do a little investigation, and I'm honestly not sure what to make of this, because it seems that the consensus is that Coal Capital Funds really isn't even real, and that they're a company that's less than a month old. And a takeout, I don't know if WeWork has 52 million shares outstanding and they're buying 50% of those shares, and that's a $250 million offer for a company that just came around a month ago. And then that's all suspicious. And then they're seemingly have their office at a WeWork location, because this is the address. And then if you go to the website, the Cole Capital website, that's interesting too. And then just a few comments, because on that website it says who the CEO is, and they say that the CEO is, I'm going to butcher this name, but Monahan Larmore, but they don't say Jonathan Monahan Larmore. So they leave, on the official website, they leave out the person's first name, the CEO, and there's no picture of the CEO. There's no board of directors. There's no investing committee. Nothing. No pictures of the individuals working there. That's very strange. So this individual, I don't know who this is, says he's not. His name is Jonathan Monahan Larmore, but evidently decided to go by his middle name because he knew using his real one would lead people to the conclusion that a guy accused of spending $100,000 of investors' funds on a dog's birthday probably isn't financially savvy. And then, I don't know who this individual is, Luke Nicholas, talks about how Cole Capital Funds equals Arcetera, has $500 million under management, and you can read this yourself, but it's this conspiracy theory, and is it a shell company, and how is it working, and I don't know, and I truly don't know. You know, interestingly enough, with WeWork, I was going to short WeWork when they IPO'd, but then they didn't IPO because, well, the terms were unfavorable, and it's a joke, and so I just stopped paying attention to it when the IPO failed initially. But then they IPO'd, I believe, in 2021 via a SPAC. Somehow I missed that. Didn't realize it until last year, and they already fallen a good deal, so I just left it alone. And normally, it's not the best idea to short a IPO when it first comes out. You kind of want to wait for that 180-day window of IPO unlocks for the insiders before they start dumping shares on the market. But I mean, I would have shorted it right out the gate, and I didn't, and that really irritates me because I'm not really big on shorting. I think money, it's easier to make money other ways. You're really working against how markets work, at least the American market, which is generally up. Not to mention, when you short, you're working against the human propensity to do anything possible to not lose your job, to not let your company go underwater, especially if you're using your company as a vehicle and a medium to shovel money into your pocket. So, but WeWork was just such a unprofitable thing. You know, here a real estate development company is pretending to be a software company. It was just so laughable. It's just beyond me. Like, WeWork and Peloton were just two crazy things. But the volatility, especially around Peloton, was absurd. And, you know, Beyond Meat was another good one. It's like, but Beyond Meat I wouldn't have shorted because I just wouldn't have. I digress off of that tangent, though. But it's just more conspiracy theories about what's going on here, which I don't know what to necessarily make of it all. True, not true, unsure. This individual says is almost certainly fake. This is the alleged CEO. Has the link here. You can go to this Twitter guy's thing. That's why I left the date and the time. You look it up. Their website has no info and was created recently. It doesn't have no info. You could say it has limited info, but which is a difference. And Cole Capital Corp, a verifiable real company, was sold to CIM in 2022. And that is interesting because this Cole Capital Funds, is it the next slide? Yes. So this is interesting because this is on the bottom of the Who Are We subsection of their website. And they have these links. You can see it in the golden color, multiple assets and an enterprise value of over $20 billion. And you click on those, and there's companies with the word coal in them and capital in them, but then you have to ask yourself, are they the same thing? And that's one of the problems with having so many spin-offs and subsidies and underlying businesses attached to other businesses, because you're like, well, many times this business actually is part of that other business, but it's located differently, it's headquartered in a different spot, it's under a different name and blah, 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 for tax evasion. I don't want to say tax evasion, but for tax reasons and and so on and so forth. So it can be really hard to track legitimate companies, let alone fictitious ones, which I don't know if this is or isn't, but nonetheless, it seems the general consensus is that it is. And I guess to end this video, because this is a short video, and when presentations look like this, when people are promoting stuff like this, it looks cute, it looks pretty, it's nice. Producer of golden eggs, but they don't talk about all the, oh, what's a nice word? Non-golden eggs that they also produce, because that's how venture capital works. You bet on a bunch of companies. Some of them are 10,000x. Many of them go to zero. So it's just all fictitious representation. Unicorn companies, AI traffic, just all the good stock promote stuff. Really, you need to get your hands on one of these slide decks and understand what it looks like when you're being gaslit. And just know, and this is a problem of FOMO and chasing, because I'm sure somebody somewhere bought the hype after hours and put in an after hours order. I'm sure someone did. I suspect it's primarily algo driven, which makes me feel better that hopefully no individual small time investor, true believer bought it. But just like Hertz, Hertz going, bankruptcy filing, the stocks go up, Bed Bath and Beyond, stocks go up 100%. It's absurd. And I don't know who's moving these markets, but I sure hope it's not you, the viewer. Because that's just degenerate gambling at that point. And, who am I to tell you not to be a degenerate gambler? But you really should consider these things. And I'm not going to belabor the point too much. But this is hilarious. It really is. Sad, pathetic, repulsive. There's a lot of words to describe it. That'd be more accurate. That'd be a lot more accurate. There's actually a few movies, documentaries, if you will, about WeWork that you could go look one Google search away. But here's a good one. How WeWork Went Wild, American Greed. Inside the rise and near collapse of WeWork, the startup co-founder by its former CEO, Adam Neumann, who mesmerizes venture capitalists with grandiose promises, even though WeWork turns out to be a traditional real estate leasing business. Software business. Hilarious. It'd be funny, I don't listen to the All In podcast, but I believe David Sachs was talking to Chamath. I saw a little skit, a few minute skit, talking about how some private equity might step in, buy WeWork out of bankruptcy and negotiate down the leases. I mean, they have, I don't know, like $25 billion of lease obligations. It's a mess. But if you buy something cheap enough, I guess you might be able to make some money off of it and leverage it up enough. But and now it's, WeWork. I don't know what the over-the-counter ticker symbol is, but I guess the point to sum things up in this video is you can't believe what you read. And the problem is if you read that WeWork buyout offer at $9 and you decide to arbitrage it after hours by buying it at even $2 a share, and you're like, well, it's going to get bought out at $9. It's like, well, the deal hasn't closed yet, and there's no legally binding contract. So even though you can make 3x, 4x your money, it's like, well, I read it. It's like, well, what exactly did you read? Did you read the actual letter? Because when they provide you with a 700% premium after hours news release, and they said they consulted God, you really might wonder what's going on. But you didn't read that. You read a derivative of a derivative of a derivative, which I touched upon in my Rosatom nuclear energy video, whenever that was, a month or two ago. It's like, well, you didn't actually read the source. You didn't even check it. You never even looked at it. You never even glanced over it. You never saw what other intelligent people were. Did you consult other people's opinions? Hopefully you are following respected individuals, whether in your actual physical, real peer group or vicariously over the internet. And anybody who did any amount of time to research this would have saw that it was quite suspicious. And that's the problem. I use these words loosely. Any amount of time. Well, all you have to do is you see Business Wire come up. They announce this news. You read that. You spend a minute on that. And then you go to your brokerage and punch in your order. Well, is that due diligence? Is that doing your research? I'm not saying do as much as I did here, but some of this is after the fact, a day or two later. Do you have to go to the buyout company's website to see if they're real? And the problem is today's day and age, the answer is yes. And it gets much more complicated, which is just another reason why investing is hard. Now, this is low-hanging fruit to avoid, like pre-bankruptcy companies probably should just stand clear of that. But people are attracted to it because of big potential gains, even though it's a very low probability outcome, but it has a high magnitude effect. I've seen people lose all their investing money trying to buy small cap biopharmaceuticals on FDA approvals. And when I say lose all their money, I mean lose all their money. At least all the money they had in their brokerage account. Maybe they have a rainy day fund for their rent and stuff, but I've seen people lose all their money on these high flyer, low probabilities. And I discuss the gold industry. I discuss to some extent, the uranium industry and other such industries. And yet again, the superficial, irrational, biased, degenerate gamblers and irrational actors have a propensity to drift towards junior miners. And then they don't position size accordingly. They don't follow up. They're not educated. They don't read a 43101. They don't even know what a 43101 is. They've never looked at an income statement or a balance sheet and see that they have no working capital and don't realize how the game's played, and after a stock run up, how they dilute the shareholders. And they don't understand, 80% of the money goes into G&A, and they don't even know what G&A is, general and administrative. And they don't know. They know so very little. And yet they're so confident. And I just hope you're not one of these people. And I'm sure one of these types of people that I've just spent the last 2 minutes describing sadly bought the WeWork at $2. And then they lost very quickly 50% of their money. And then they say something like, the market's rigged. And they come up with these creative conspiratorial narratives to comfort their afflicted ego instead of recognizing that they're the problem and that they have a mismatch between themselves and the game they're playing. But didn't mean to end this on such a dire note, and I was hoping to be a little more inspirational and positive and upbeat and saying, hey, don't fall for such gimmicks, but we'll end it there. Don't fall for such gimmicks. Thank you for watching.